from their long-term trend. We believe that currently we're not yet seeing serious indications of a bubble in the property sector. Part of this may have to do also with the current regulations. We're limiting the lending of the banking sector to the real estate sector to just 20% of their total loan portfolio. The other thing would be that in terms of, at least in terms of mass housing, we still have a considerable backlog or excess demand. And so at least in the residential segment, there is still a long ways off before we could say we have an oversupply. So I guess the potential for a bubble might come from the commercial end of the real estate sector, and that's something that we are looking at as well. And then for the third, if I may, just comment quickly on the third question, which is about planning for extreme events. At the BSP, we've over the last few years, we've introduced a framework for risk management in terms of monetary policy. And this framework includes taking a look at issues that we don't look at regularly but should be on our radar screen as policymakers. So we have regular exercises we call environmental scanning exercises. We invite experts to talk about different issues that may not have anything to do directly with monetary policy or banking supervision, but we just try to look at the issues nevertheless. For example, the issue of climate change, which I guess one would not normally associate with monetary policy, but here we're experiencing extreme weather disturbances that are affecting global food prices and that are translating into inflation across the region. So I guess that would be the link between climate change and monetary policy. So we also make an effort to look at these issues that are not directly related to our mandate. Thank you.
Any comments from our IMF colleagues?
Let me briefly comment on some questions about the Middle East and North Africa and the OPEC issue. So my quick answer is that the role of the OPEC, especially this year, next year, will be very important. As I mentioned, the demand growth from both the advanced economies and emerging economies for oil is rapidly rising as the economies are recovered. However, the prospect for the oil supply from non-OPEC countries this year, next year are not that promising. We expect that the oil supply from those regions it's most likely be flat or slight decline. That means that given those kind of some oil shortfalls, short-term disruptions from this Libya, around 1% of the total production, should be offset by the additional supply from the OPEC countries. However, until, as you may know, the OPEC's spare capacity, sorry. Yeah, spare capacity is enough to offset those kind of shortfall or oil disruption in Libya. But the question remains the willingness of the OPEC countries to tap into their spare capacity in the near term. In the middle of last year, when the oil price was moving in the range bound around $70 to $80, the OPEC announced that the fair price is around $80, which we interpret that, market interpret that once the oil price reaches $80, we go to above the $80, the OPEC country may start to tap into their spare capacity and try to supply more. Actually, but however, that didn't happen. And then actually lately, as another professor mentioned, due to some social unrest, including in Saudi Arabia, there are more increased revenue need for those countries to spend more for this year, next year. So our current understanding is that the total amount of those kind of spare capacity that they can tap into this year is quite limited. That's why we expect that the oil price will remain quite high, more than $100 this year, next year. So definitely the role of the OPEC countries are more important than any other period this time.
A quick response from our...
set up a meeting that would be very educational there. That's the source of our problem here. The politicians don't want to understand what you just expressed. Thank you. Is there media present? I hope they report that.
John?
I was just going to touch briefly on the fat tails question, and this is definitely something that the IMF as an organization is actually engaged with. So there's over the past several years, we've been developing a framework called the Early Warning Exercise, which is basically a combination of kind of looking at all of kind of our member countries and kind of indicating to them where there may be areas of concern going forward, and then also complementing that with a variety of kind of scenario-based analysis, which is basically looking at kind of bad scenarios and asking, okay, do we think that these are likely, and if so, what would be how would we prepare for those, and what would be best responses, kind of. So.
Very good. Let me give Marcelo a chance to comment as well. Marcelo, would you have any comments on those questions?
Okay, hello. Okay, I got the question in writing, so it's much easier now.
Great.
So the question about the international, whether there are international, regional, private groups doing scenario analysis and planning for extreme events, especially regarding oil prices. Yes, in fact, a simple Google in the internet will show you so many reports and so many projections, right, of what might happen. Some are more like on the doomsday side, others are more optimistic. But in general, it is a consensus in the academia, and also you see some governments issuing reports that we are about to face, an extreme issue with oil prices, and which is not low probability. At this point, is very, very high probability. Now, unfortunately, our political structure really ends up delaying the process of reckoning, in a sense. If you just look what in terms of official, I would say official statements, like from the IEA and even OPEC about peak oil, you don't see anything there. So the numbers don't lie. The numbers are very clear on that, but you still don't see an official statement saying that, yeah, we are in peak oil, we should do this and that. And that probably, perhaps, is in order to avoid panic, the markets will panic or so on. But still, it really delays the reckoning, from people who can, and from the institutions who can actually take action and minimize the impact. Also, you can just look, for example, in the U.S., right, where the Fed has as parameter for inflation target the core inflation, which actually excludes food and energy. So it's actually even extremely misleading in a sense, because how can you exclude energy and food prices from inflation targets that you base your interest rate policy on? Now, when you look at the actual CPI EU, for example, it's for urban prices, it's already on 2.7%, 12-month average from March, while the core inflation is 1%, which excludes energy and food prices. Now, just energy is contributing out of those 2.7%, 15.5% over 12 months. That we're talking about March 2010 until now, until March 2011. So these are actual numbers, these are real numbers, and it doesn't seem that the public and the wider media are concerned and aware of that. And that definitely has to do with our political structure. So it seems that we respond better to crises and shocks than actually very academic and well-rounded arguments ahead of time.
Very good, Marcelo, and thanks for also addressing part of the